And good morning, everyone. John Hutchinson and Jeff Wood from Traders Reserve along for Breakfast Club this Wednesday. I don't know what day of the week it is. Wednesday, August 6th, 2025. We don't have a ton of slides and stuff, so we're going to be doing something a little different today, uh, covering a little bit of advanced look at next week and giving you some other ideas that you can work with both this week and next. So as we get started, as Jeff and I were just talking about um, concerns we have about next week, which come down to a couple of things. One, um, the announcement earlier between Monday and Tuesday, of new tariff announcements expected next week for semiconductors and pharmaceuticals, or therapeutics and pharmaceuticals. I'm not sure that that's going to be positive for technology stocks on the semiconductor side, but Jeff and I are going to look at something a little contrarian as it relates to the pharmaceutical side. So we'll take a look at that today. Next week is also CPI and retail sales. So both a look at how the consumer is holding up and inflation metrics from July. There's increasing concern over potential for stagflation following the weak ISMs. Both the ISMs missed manufacturing and services. Let's actually switch out and let's see here. Take a look at what happened on the ISM services side. So you can see this is a clear trend that is developing in the ISM services. 60% plus of the U.S. economy is services based, and we're bouncing between that 50 and 51 level now between May, June, and July. But the trend is certainly lower, and that becomes an issue because of the breadth of the economy that is related to the services industries. But the second issue is here on the employment side. Employment fell in the services industry last week, so that is consistent with the jobs revisions that we just that everybody that blew up last Friday, right? So not a surprise to see that. But what is a surprise is here a clear trend rising prices in the services industry, and rising dramatically since March, which is, some of this is and can be tariff related. But we can see the clear trend higher in prices, both in the ISM services and to a degree in the manufacturing, although manufacturing prices actually fell a little bit. But you could see manufacturing prices also rose in and around Q1, Q2 before falling in July. So this is one of the reasons why I say that there is rising concern around stagflation. And bear in mind, especially as it relates to your trading and how you allocate capital going forward, stagflation is much more difficult for the Federal Reserve to fight than inflation, right? Inflation, you just squeeze the money neck so that there's less money in the economy chasing goods. Stagflation is a two-part problem. It is both a growth and inflation problem. Falling growth, rising prices. So if if this is the beginning of a trend, we don't know. It's still only a couple of months worth of data, technically speaking. This may be one reason why the Fed is taking more of a wait and see approach, not strictly because of the labor market, but or strictly because of the inflation, but because of the combination of the two. I'm not saying that that is the case, but I do believe that that could be factoring, or that should be factoring into the Fed's discussions, especially as they move forward. So both manufacturing and services on the downside last month. Um, so we have to ask ourselves, is the market perhaps a little too heavy on the top? And I would expect this being August, it's always one of the toughest months because everybody wants to be on vacation, right? Who really wants to be trading in August? Nobody. They want to be at the beach. That being said, I do think that there are still opportunities and opportunities to protect yourself by hedging, which we'll take a look at in a couple of minutes, and some other unique areas where you might be looking for some potential growth stocks. So let's take a look at that. Give me 1 second, flip over to the good old FinViz futures currently ticking flat to slightly higher. Um, Russell is up a little bit. NASDAQ, S&P, both up, tenth of a point. Dow up slightly. So that's all good news. Yesterday's big news after the close was on two fronts. One was both SMCI and AMD posting poor earnings. I mean, for SMCI, I'm not surprised. I'm not convinced that that company is well managed anyway. Like them right at the start when they supposedly had this great computer, and then it turns out you couldn't trust their numbers right out of the gate. AMD has been running at big highs there. You can sort of see the inset chart. So falling off a little bit on pullback in earnings, not the worst thing in the world, but certainly breaks the trend of AMD. Stock had moved up 60% since the May lows. Excuse me, 80% since $80 per share since the May lows. But what I was looking at overnight was an old favorite of ours, Arista Networks. If you traded with us in three stock strategy, well, I think it was beginning of 2024 when we traded ANET for 12, 13% gain in 1 month. Announced excellent earnings last week. Stock is up 13%, 13% pre-market. But here, what I was looking at, your forward PE is still pretty low for a tech stock. A 41 PE forward price to earnings ratio. That could speak to, I think, value. It's still trading at roughly a 20% discount versus its trailing 12 months PE. I like this company. I've always liked it. I've recommended it multiple times. So at any rate, I would put this one on your watch list. I wouldn't necessarily jump in and buy at a breakout high here. If nothing else, you want to wait and see if the stock doesn't come back, tick back a little bit down into somewhere between the 125 and 130 level. You can see that there's a high back here at the same range that did not hold, and that was with no earnings announcements. But that was pre-tariff. So yeah, that would have been late January. So pre-tariff, big break there. And where is your 52-week range? 52-week Y is, so we are right at about the 52-week highs, confirming that. Looking at a weekly chart, deep V recovery here this year, but a solid move higher on the weekly chart and on the monthly chart. Three tall soldiers. Again, I would look for a little bit of a pullback before jumping in on this, but anywhere 125-ish or so, 123 to 125 would be worth owning the shares in this one. They're consistently topping earnings. They did have a 4-for-1 stock split at the end of late last year, December of last year. But earnings came out strong, 12% on the quarterly EPS, 5% on revenue. It's good stock, a good company to keep on your list. They do have options. Take a quick look. They are, I believe, weeklies. They are weeklies. So even if we went out a week, somewhere around a 125-ish, you're certainly getting paid on that one. If you're selling a put, if you're selling a spread, looks like $1.30 on a 2 wide. You might want to keep a note on that one, Jeff. That's a pretty small range. You don't have to have it for very long. Now, having said that, obviously with the backdrop of potential tariffs announcements around semiconductors, obviously being computer hardware, Arista Networks is a little bit above the food chain on chips, but they're still reliant on chips, which means if there are increased tariffs on semiconductor or chips, then the potential for cost increases could negatively impact Arista Networks margins. So that's something to keep in mind. But again, we don't know what that's going to be, what that announcement is going to be. So that's one reason why, another reason why I would say I would wait for the stock to maybe pull back a little bit. Might be able to get it at an even better discount than I'm projecting at the 123, 125 level, but we'll see where that takes us. The other thing I want to take a look at real quickly is keeping Netflix on everybody's watch list. Again, a low PE for a company that is literally printing money quarter after quarter. Solid pullback from a high here in the 1350s, near 1350 down to 1150. You just got a $200 per share discount. And I would keep my eye on Netflix for a couple of reasons, even though it's violated its 50-day and 20-day. One, the main reason for the sell-off has been the projection by Netflix that their costs would increase for both acquisition and production in the fourth quarter, third and fourth quarter of this year, of the calendar year, in part because they're in production on some of their best shows, the shows that gain them the most viewers. So if you have a longer time horizon for holding a stock, this is still a reasonable entry point. I still believe this stock has to split at some point. Whether, I don't know if it's 2, 4, 5, 10 for one, no idea. But at some point, I've got to believe Netflix is going to split. But that's not a reason to own it. Just positing that I think that stock is going to split. But I keep coming back to this because it is an undervalued stock. Number one. Number two, it has an EPS next 5 year. If you look in the lower frame down here, EPS next 5 years, 25%. If you forecast that out, that's a stock that's going to grow by 25% a year. But in two, that would mean it would double in 2 years at that growth rate. So there are fundamental and technical reasons for owning the stock on that side. Does trade options, but obviously at 114,000 per option contract, I'm pretty sure you'd have to leverage spreads on this one, which we have, and successfully. It's one of our best traded stocks this year on the spread side, but you can see why, as the stock really weathered the storm on tariffs. A nice little W pattern here in the 900 to 11 range, 1,000 range, excuse me, and it's broken out since. Comes back and it's sitting on roughly a reasonable support line right there. If it holds, gets back above its 50-day, that might be an entry point, especially if the 50-day curls back under or around where the stock is currently trading. So some ideas for everybody. Again, Arista Networks, Netflix. One other one that we're going to take, and Jeff, I know you have a couple of slides. So are you ready to go?
I'm ready. Yep, whenever you are.
All right. I will stop share and turn it over to you.
Oh,
And I thought
you were gonna give us one more.
No, yours.
Oh,
It's
all right.
that's the SMH that we were going to look at.
Oh, gotcha. Okay. All right, then let's get to it.
And I know you had a couple of slides you wanted to share, so feel free to do that.
All right, here we go. I'm just trying to find the right screen to share. As you and I were both talking about, you can have 40-inch, 60-inch monitors, and it's somehow it's never enough, or you have too many monitors or whatever. Anyway, all right. So as John mentioned, overnight futures are pointing to a higher open. We do have some concern about new tariffs and then some overall mixed economic signals, as John mentioned. So I don't want to go over too much about that, but yes, services did miss. And so what that is really doing is now pushing that September rate cut even higher, now jumping up to about 85.5. I think on Monday it was 84.9 or 85. So not that much of an increase, but certainly showing an increase over the last couple of days that the market is definitely pricing in a September rate cut.
And to piggyback on that, one of the things that I'm starting to hear whispers about is Wall Street expecting another half-point cut in September and not a quarter-point cut.
Oh, interesting.
We'll see how that transpires.
Yeah. So this is the 5-minute chart overnight of the S&P 500. This has your volume weighted average price. That's a mouthful, the VWAP. And then these are standard deviation bands from the VWAP. So currently trading right in the middle, waiting for direction. Although, if you're into day trading or even zero DTEs, what you can do is look for movements that exceed 2 standard deviations of a move away from the VWAP, and that's usually S&P 500 is a reverting to the mean sort of of things. So when it gets below or into this 2 standard deviations away from the VWAP, that's usually when we expect to see a reversal. So anyway, that's just a quick pointer there. Next up, we have earnings continuing on with McDonald's, Disney, Uber, Shopify, AppLovin, and DoorDash. So we do have S&P 500 year to date or year over year higher than even the consensus. So that's sort of a good thing. Overnight, Vertex is down 20%. That was a trial failure. We also have Axon. They beat and raised expectations. So that's one of the biggest overnight winners. And then we do have a couple of Fed speakers today. So just watch out for anything that they may say that could influence market prices, especially as they talk about labor and inflation and all that good stuff. So since it is Wednesday, I like to do just some couple of quick scans for everyone. One that we're going to talk in more detail now that I've or that we have John with us who can help decipher some of this. But really quick, what I just said was I wanted to see, what the top S&P 500 gainers were. This is percent change 3 days ago since August started, 3 trading days ago. So this is your top 20% gainers. And what was interesting is I also threw on a 5-day volume percent chart. And I was kind of seeing if there was anything that, do we have any strong gainers with increasing volume? So I thought it was really interesting. I've not looked at the chart on this one yet today, but I thought it was interesting that eBay is one of your top gainers, yet the volume is dropping off. So I don't know if that was an earnings related play or something. As far as 2 stocks that are both positive in percent change from 3 days ago and positive in percent volume change, that would be this Willis Towers and Expeditors. So 2 that I will be looking into a little bit more after this session today. And then this is just the same list, but sorted by S&P 500 volume gainers. So this is the top 20% volume gainers over the last 5 days. Again, trying to see if there's any correlation between volume change and percent change from 3 days ago. You have Rockwell Automation and News Corp. So 2 that may, and actually one down here, Axon Enterprise. We just talked about Axon since they had their earnings beat. So 3 that you can add to your watch list and see if you want to trade those. Next, I have a 3-day gainer. So this is what I just went out to the regular market and I just said, okay, what are the top 3 even though it's actually percentage of the last 5 days, this is stocks that have 3 consecutive price day advances. So again, since August 1st, we've had 3 market days. So I wanted to say, I wanted to see which stocks have gained all 3 days so far across the entire market. So this isn't just S&P 500. And what was really interesting, this is why I wanted to bring John into this one, is what I noticed is therapeutics, biotech, pharma. So on this list, there's just a bunch of pharmaceutical companies, which I thought was really fascinating given the tariffs or the proposed tariffs on pharmaceuticals. So is that going to end up helping US companies? And so that's where I'm going to bring in John and get his interpretation on this.
My view on it is that the tariffs will be viewed as making U.S. pharmaceuticals more competitive to own their space, because those tariffs will be on foreign pharmaceuticals that are not, they're never going to produce their products here in the United States. They're just not. So that's, if those, and I think the tariff level was something like 250%. That's at least been, that's what's been talked about in the media. That's effectively closing the U.S. market to foreign pharmaceuticals. That's a problem in one sense, from a competition perspective. But in the short term, it might give a boost to U.S. based pharmaceutical companies, or some pharmaceutical companies that do have operations in the U.S., which I would have to really research that one, because off the top of my head, it's too early for me to think of one. Maybe BMY.
Yeah, I don't
I
know.
know. Anyway, but at any rate, that's what I think what we have is this. So with these two announcements next week between semiconductors and pharmaceuticals, you have these sort of like these reverse announcements in impact, meaning if there are high tariffs levied on semiconductors, that's a negative. That's a flat negative, because nobody's going to build a chip plant in the United States anytime soon, and 90% of the chip market is outside the US. So you're looking at a very long ramp up before any chip company would be able to produce something here in the US on scale or at scale. And it's sort of the reverse for pharmaceuticals, where you have a very large, healthy sector that produces anything, create weird name with drug here, right? Uh, in fact, I swear I think they play Scrabble to come up they just shake the, or Boggle rather, shake up the letters in the Boggle game and say, oh, there's a good name for a drug. But the those tariffs are much more protectionist for U.S. companies. So that, I think, I do believe that that's one reason why we're seeing a rapid rise, or in the short term, with pharmaceuticals versus chip stocks, which has sort of been a little bit on the reverse.
Which it's not fun for us because there's not many times that we're trading a $2 pharmaceutical stock, $3 pharmaceutical KYO. Come on. But hey, if you're interested in buying stocks, you want to take a risk. I mean, look at some of these things, $2.97. Jeez.
Absolutely, it's the land of penny stocks.
Right. You can take a chance. I mean, so far in 5 days, I mean, Biaxel Therapeutics is up 86% in 5 days. So, all right, moving on. I have one more slide, then we'll get everyone out of here for the day. This is just wanted to kind of do a midweek update. We talked about T-Mobile on Monday, being that it's in the XLC, which was a strong, one of the stronger, it's pretty neutral, but still one of the stronger sectors in August. So I said, hey, as long as T-Mobile can hold its 20-day moving average, look for that to go up. So we talked about the $2.65 spread, the $1.20 out of the money spread. That's currently going for 303 and 145. So that's working good. And then this Harmony Gold sort of hedge, which also occurred because we had a bullish crossover, the 10-day crossing over the 30-day, and both 10 and 30 being above the 200. That was going for 75 cents on Monday, currently worth $1.65. So if anyone got into those, let me know.
That's 100% return.
Yeah, it wasn't too bad. I'm no longer in that one, but it was pretty good. I liked it.
Awesome. Let's bring up the SMH real quick, and then
Yep.
we'll call ball game.
Right. Let's oops. Come on. Now
Did you,
it's
try- did you try
everything.
two claps?
Yeah, no, it's because now everything, the suggested thing to share is all PowerPoint. I'm like, no, I got to go find Thinkorswim. Anyway, all right. So what do you want? SPX? Oops.
SMH.
SMH. Right. If I would listen, that would help. SMH. Let's see, you want the daily. Okay. Daily
Yep.
option chain. What do you want?
Stay where you are for just a second. This is one where we've had a clear momentum break. And although this is also somewhat following that pattern that you talked about on Monday, with the sell side Friday, and then a reversal slightly higher, but not higher than Friday's open. And so this is one where I would start looking at potentially hedging on the downside. Um, if when SMH falls, it can any of the chip stocks too, it can fall rapidly and by wide ranges. So if there's a really negative headline next week relating to the semiconductor announcements, this is one area where I would look for a potential hedge. My range is somewhere around that 273 level or below. Um, and that's rolling. If you roll all the way back to the left-hand side of the chart, you can see that's the point where we broke out back at the end of June. So I would look to, I mean, if I were buying put options, I would look to buy below that level. So Jeff will go over to the chain in a second to see if that's reasonable, but that's what I would be looking at as a short, quick spike down in the 1 or 2 week time frame. Maybe looking in at the 15th or 22nd expirations. We could start on the 22nd, fine.
Yeah, because
But
I'm we have SMH actually in
MTC.
MTC. Yep. So I'm gonna skip over the 15th of August, but yes, it is something that we're looking at getting out of a little early. 22 August. All right. So you want on the put side?
Yeah, so you probably have to do something like I mean, I wouldn't go more than a 2.5 or 5 wide. Keep it small. Um, but if it's currently trading at 287, I would probably want to be underneath that, buying underneath that to spend the least amount of money. Um, yeah, somewhere in there.
I mean,
That,
if you're certainly if you're a little bit more on the bearish side or want bearish protection, the long debit side, this is $2 or the $285 put, which is slightly out of the money. Yeah, so maybe we would have to. Anyway, it's 95 cents for a 2.5 wide spread. So let's get rid of our current position. So it's 95 cents to make $1.55. So more than a 1-to-1 risk to reward ratio. Not a bad thing for a debit trade.
and just for kicks, go out to what's your first expiration in September?
September 5,
And go down into the 270 level,
270.
270 by 265. 267, sorry, 270 by 267.50 as a debit.
Whoa, that's not what I wanted. Hang. Oh, cool. It's just going to be frozen for a second. The ongoing Thinkorswim versus Zoom. All right. Come on. Oh, this is really about 260. There we go. All right, 267 by 265 is what we want.
That'll
Let's
do.
get rid of some of these other ones. 45 cents. I mean, you're going to need a pretty nasty drop, but yeah.
Yeah. What's the return?
I mean, potential for 205 if you have a normal, or if you have an out of one standard deviation move, then you have a 205 gain on a $45 investment.
Yep, either of those would work. So either a 275, 277.50, 275, or Uh, if you're really bearish, 267, 265, that gives you some hedging protection on the SMH. Um, the cost on that at 45, what, $45 a contract, I wouldn't
Mhm.
go more than one, right? You're just trying to pick up a few $100 or 50 to $100 just to protect yourself. So we'll keep track of those and see how they play out over the next couple of weeks. But that's what I was looking at, somewhere below that 275 level over the next couple of weeks. If that tariff announcement is a huge negative surprise and the tech market gets a significant pullback.
All right.
Anything else that you want to cover, or are we good today?
No, we are good.
Look at that, 30
Let's
minutes on the dot. Hang on one second. Let me,
let's get people out of here and off to trading.
yep, stop the recording. So we'll be back.